Hey everyone, it's finally there. The Ehang audited report got released. I want you to have a quick look at this. 261 pages. So I spent a bunch of hours to go all through this so I can tell you what will concern us. The last earning release was only 13 pages long, as you can see here. So there is a lot we need to talk about today. But first of all, welcome to High School Dropouts Advice. If you need subtitles, click on the subtitle button right here. If you want to join my Discord channel, you can do this through Patreon, which I link down below. So the Ehang stock had a rally up to $47 per stock before people saw the earning release. And we are trading at around $38 now, which is about a 20% drop from its high of $47 today. We will talk about what I think the reason is for this drop. I personally think there is a lot of good momentum in the stock, and you can decide for yourself if the problems I tell you in a bit are concerning or not. Researchers and videos like this take me about 10 to 20 hours of work. If you want to help me out and you want to make at least $32, then you can sign up at Webull. You can trade Dogecoin, Bitcoin, Ethereum, and of course stocks on Webull. You would get 4 free stocks up to $2,000 per stock when you deposit at least $100. The lowest amount you get from the 4 free stocks is $8 per stock, so you get at least $32. Use my link down below in the description to get the 4 free stocks. The first thing most of us investors are worried about are the numbers. So let us pull them out. So the total revenue before the audit is 180,093,000 RMB. The audit report has 180,093,000 RMB as well. So the revenue did not change after the audit, which is not too bad. Now let us have a look at other vital numbers. We had in the unaudited report 204,051,000 in operating expenses. We have the same number after the audit, 204,051,000. So now let us check if it results in the same amount of earning or losses. We have 92 million RMB in losses, which equals 14,107,000 US dollar. After the audit, we have 92 million RMB in losses, which also equals 14,107,000 US dollar. So the operational numbers are correct. Now let us check on their cash equivalents. Maybe they made a mistake here. Before the audit, it was 140,173,000 RMB. The exact numbers appear in the audited report. So what caused the small sell-off of around 300 million in value today? The report was over 261 pages long, and we have a lot more disclosed information that was not released earlier. So the numbers remain the same, but there are new thoughts and new disclosures which might have increased some concerns in investors. In 2019, the board of directors had approved a share incentive plan, which allows increasing the share numbers by 15% from its 5,455,346 shares in 2019. As of March 31st, 2021, we have 6,403,000 restricted shares. The plan also describes how employees, consultants, and directors can get awarded shares. So all this is nothing out of the ordinary. Many companies do it in a similar way. Now let us look further. On the next page, we learned that Ehang's board of directors holds over 50% of the voting rights and is considered a controlled company. So the Nasdaq does not require a controlled company to follow certain restrictions and rules. For example, it does not need to have a majority of independent directors on the board to have an independent compensation committee and have an independent nominating and corporate governance committee. All those instruments are helping to protect the shareholders of non-controlled companies, but Ehang is a controlled company with the majority of the voting right, so this does not apply to them. But Ehang says, we are a controlled company as defined under the Nasdaq stock market rules, but we have no current intention to rely on the controlled company exemption. This means that Ehang will have independent board directors look over Ehang and ensure that our interests as shareholders are not neglected. So this is overall not a bad thing. There will be 3 different committees with different tasks, as you can see here. They have mentioned the board members and it was made sure that they are truly independent. I don't want to get into too much detail, but this is what we should know for now. Now I want you to have a look at this. The shared ownership and the related voting rights. We see that CEO Hua Ji-hu has many Class B shares and his voting right is at 87.4%. CFO Richard Jian Liu only has a 0.3% voting right. So all the power is held by CEO Hua Ji-hu. Let me give you a few examples here. Elon Musk owns 22% of voting right at Tesla. Mark Zuckerberg owns 60% of voting right at Facebook. So if you are a big fan of CEO Hua Ji, this might not something which would concern you. This is something I want you to be aware of. This is something Ehang also have mentioned in their disclosure and this report. Our dual class share structure with different voting rights will limit your ability to influence corporate matters and could discourage others from pursuing any other controlled transaction that holders of our Class A ordinary shares and ADS may view as beneficial. So now that we know about this, let us have a look into some tax questions which can result in an unfavorable consequence in the near future. If we are classified as a PRC resident enterprise for PRC income tax purposes, such classification could result in unfavorable tax consequences to us and our non-PRC shareholders or ADS holders. In other words, if the People's Republic of China determines that Ehang's enterprises in Europe and abroad are in fact Chinese companies, they will be subject to a tax rate of 25%, which of course will cut into their profits and hurt the share price. Ehang does not believe that this is the case, but the government has the last word here. At the moment, it's not a clear situation. There are no significant sales which will draw attention from the government. So this is something we need to see and wait for. Now, let us talk about problems I think which are the biggest. At least these are the ones that really concerns me the most. The audit report included in this annual report is prepared by an auditor who is not inspected by the Public Company Accounting Oversight Board. And as such, our investors are deprived of the benefits of such inspection. The problem here is that the SEC decided that each audited report needs to be inspected by the PCAOB to be accepted. Ehang has used an accounting firm in China, which is outside of the jurisdiction of the PCAOB, and China does not want to give them permission to look into Chinese companies' finances. So with the US and Chinese political tension, we have to wait and see how the SEC and PCAOB will decide to fix these issues. Each company can fill an audited report for 3 years with an accounting company and not inspected by the PCAOB without getting penalized and probably delisted. The delisting will start in 2025 for the ones who did not comply the last 3 years. Ehang, however, could forward their audited report to a co-audit firm, which the PCAOB can inspect to satisfy this requirement. If they do it or not, we will see. In the end, I also want to add the information because this is a game changer. If Ehang gets delisted, it's impossible to buy over the counter anymore. If the company used a foreign accounting firm that cannot be inspected by the PCAOB for 3 consecutive years beginning in 2021. Ehang's independent registered public accounting firm is located in and organized under the laws of the PRC, a jurisdiction where the PCAOB is currently unable to conduct inspections without the approval of the Chinese authorities, and therefore our auditors are not currently inspected by the PCAOB. Let's see what Ehang is also disclosing here. Additionally, whether the PCAOB will be able to conduct inspections of our auditors in the next 3 years or at all is subject to substantial uncertainty and depends on a number of factors out of our control. If we are unable to meet the PCAOB inspections requirement in time, we could be delisted from the Nasdaq Global Select Market, and our ADS will not be permitted for trading over the counter either. Such a delisting would substantially impair our ability to sell or purchase our ADS when you wish to do so, and the risk and uncertainty associated with delisting would have a negative impact on the price of our ADS. Also, such a delisting would significantly affect our ability to raise capital on terms acceptable to us or at all, which would have a material adverse impact on our business and financial condition and prospects. So what is the give or take from all this information? We know that the numbers are as they were, but Ehang was maybe looking to get the report audited or need someone to write all this disclosure in English that would comply with the SEC. However, there is a restriction and they had to file it in China with a company that the PCAOB can't inspect. Ehang was, in my opinion, very honest and did disclose everything we should know as an investor. The problem is bigger and is not in Ehang's or any other Chinese companies like NIO and Xpeng's control. This is something purely political, and we have to see how things develop and if there are accounting firms that can satisfy the needs for these two countries to work together. In every problem there are new opportunities. Many companies like Ehang are in the same situations, like NIO for example. NIO has applied to be listed on the Hong Kong Stock Exchange, so did Xpeng. However, it's connected with some restriction on how the US investors can trade them, if at all. So this is something we need to wait for and see how things play out. We have to understand that we are investing in a time with immense political tension between China and the USA. We can see from the last president that decoupling in trade relationship was started. With the current president, the aim is to continue this decoupling and improve self-sustainability. We will see how things will turn out. I will stay invested in Ehang. We still have more than 2 years until the delisting starts, and I think that there's still a lot of room for the stock price to grow and enough time for the politicians or other accounting firms to find the solutions. Anyway, for legal reasons, let me tell you that I'm not a financial advisor. I'm just a guy on YouTube. Please remember to do your own due diligence and hire a financial advisor if necessary. Please like, share and subscribe to my channel when you don't want to miss out any other stock information and investment opportunity. Thank you so much and see you hopefully in the next video. Thank you, bye!